now we're going to take the idea of explicit and implicit cost to find our profits. Now we have two types of profits the same way we have two types of cost. So we're going to have accounting profit and economic profit. Now accounting profit is pretty straightforward. It is the difference between the dollars brought in and the dollars paid out. It's a cash concept. It goes back to what we were talking about with the explicit cost being the exact cost of business. You actually see what you're paying for and you see what's coming in terms of revenue. So for accounting profit, what you're going to do is just do total revenue minus your explicit cost. All right. So going back to our example of the $6 latte, you make 100 of them. That's $600. But let's say you had to pay your labor $200, right? And you had to buy materials and rent. Let's say it's $100. So your accounting profit would be $300. Okay. So this is what accounting profit is. Pretty straightforward. What money comes in minus the exact cost that's coming out. So explicit. It's very important to know that your break-even point is when your profits equal zero. This is where you're bringing in $600, but it costs you $600 to make all of those goods and services. So your profit is zero. That's breaking even. Now, again, another example, I made $400 in sales in a weekend, but I had to pay $150 in materials and $100 in labor. So $400 is my revenue minus my cost. So my accounting profit is $150. Okay, again, pretty straightforward, right? Money comes in, money goes out. Now, that's accounting profit. Think of accounting as like calculations, trying to balance out your balance sheets and all that. And so you end up with your profit number here. You can actually see that in a statement. Now, economic profit is a little bit different. You are now going to be including explicit and your implicit cost, to where your economic profit is just total revenue minus your total cost. This is the total cost that considers explicit and implicit at the same time. So when we have economic profit of zero in this case, we're going to call this a normal profit because you're still going to be earning an accounting profit. Let me show you what we're kind of saying here and an example. So if I made $400 in sales, I paid $150 for materials, $100 for labor, but I gave up a side gig that I used to do on the weekends, so I'm giving up $200 doing that. So basically, if I did the coffee trailer, I'm making $400 in sales, right, going this way, but on my side gig doing like construction work, I can make $200 in a day, right? So here's the deal. In terms of the coffee trailer, right, I have the $400 in sales. That's good. I pay out the materials and the labor. So now I need to consider the implicit cost because my other job I used to make $200. So now I need to include that. So I will subtract the $200 because it's a cost, an implicit cost. So now my economic profit is -$50. Okay, and this makes sense, right? Because look, by going down this route, I'm making $150. If I go down the construction route, I'll make $200. So by choosing to do the coffee trailer, I'm giving up on $50, right? So that's what the beauty of economic profit is that you're trying to see, is this route worth doing, or should I do something else, right? So the reason economic profit of zero is called a normal profit is because of this. If I were to have another situation where I'm making $600 in sales minus my labor minus materials, so now I'm at $350 in terms of accounting profit. But if I were to my side gig, if I were to do that, it would make $350. So my economic profit would be zero. So economic profit 0, normal profit, because guess what? We are still earning $350. You can earn $350 going this way or this way. So that's why economic profit of 0 is called a normal profit, because you are still earning money with what you're doing. All right. So again, the difference between the two: accounting profit is total revenue minus your explicit cost, the cost of business. Economic profit is total revenue minus the cost of business minus whatever you're giving up. Okay. So with that as well, both types of profits are very useful. Accounting shows you just how much cash you are making today, and economic makes you consider the other possibilities to see if this business venture is economically worth it. It gives you an idea of what your sales goals should be, and not just about making a profit, an accounting profit over here, because you also have to consider what's making more than your next best alternative. So here's an example. I need to make sales of at least $450 with my trailer to make my time worth covering the $200 from the side gig. All right, so this is pretty important, because if you're thinking about setting up a business and you're like, okay, cool, I'm gonna make $1,000 worth of sales, and my profit should be $100 after that. So I'm making money, and that's true. But now, in terms of economically, we got to think about, okay, I'm going to make $100 going this way. What's my other option over here? Well, I could be making $200 doing this. So what's better, right? $1,000 sounds great in terms of sales, but if you look at the actual end profit there, only making 100 versus giving up the 200. So now we have to decide what's better for us to do. Maybe we have to adjust our sales goal, such as being $1,100, not just $1,000 in sales. We need to aim for $1,100 worth of sales to be even with both routes that we can go down. Okay. Here's another example where this lawyer, she's working in a law firm, but she's decided to go on her own firm, and so she's looking at the cost of doing both, right? So to go on her own business venture, she needs to rent an office and pay a law clerk salary. So going down her own firm's route, she's spending $85,000 up front, but she will be making $200,000 in revenue. So she is making $115,000 doing her own thing, and that sounds great, right? And plus, she's making $200,000 revenue. It's a huge number, right? But however, we need to consider the implicit cost. She would have to quit her current job earning $125,000. So what is her economic profit from choosing her own firm? And sure enough, by doing the $200,000 minus the $85,000 and the implicit cost of the foregone salary of $125,000, she's actually losing $10,000 every year by doing her own firm. Okay, so again, this is very useful information because it gives her an adjustment of what she should be aiming for if she's going to start her own firm. All right, so as good as $200,000 sounds, she needs to at least make $210,000 in revenue just to make it even. All right. Now, if she did make zero economic profit, remember, she's still earning an accounting profit. So it's still worth her time to do that. Okay? So that's the difference between the two. Economic profit, explicit and implicit cost there. Accounting is just explicit. All right? In the next video, we'll talk about the production in the short run.